All right. Thank you so much for taking time out, sir. Now, from funding infra and industry to enabling financial inclusion at the grassroots level, now banks have served as a catalyst for national progress. A strong and inclusive banking system is the backbone of India's vision for Viksit Bharat. Now, over the years, India's banking system has undergone a remarkable transformation with stronger profitability, digital banking, fintech innovations, and government-led initiatives bringing millions into the formal financial system. India's largest lender, State Bank of India, has been at the forefront of this change. To discuss how the banking sector can accelerate India's journey to Viksit Bharat, ensuring both financial inclusion and economic resilience, we are joined by now Mr. C.S. Setty, the Chairman of State Bank of India. Welcome, sir.
Sorry, just before we start, I wanted to make the point, sir, that we track analysts every day who look at your sector as an investment. And over the years, what I have noticed is that from private sector banks, every analyst worth their salt is now talking about public sector banks, led by SBI, being the best investment because of clean balance sheet, because of faith of depositors and investors. So we should start by talking about this huge turnaround in the perception of banks and, of course, SBI leading from the forefront.
Thank you. Thanks for giving me this opportunity. I think the trust element was always there, right? We, public sector banks generally carried the great amount of trust of the depositors. What has changed in the last few years, particularly post-asset quality review in 2015, that the recognition, recapitalization, and the reforms, which have really worked well for the public sector banks today. The balance sheet, as you mentioned, are cleaner. And more importantly, I think from the last cycle, we have learned our lessons in terms of how to use the great amount of data which is available now for underwriting the loans. There's also a mix of advances, loans which have happened. Most of the public sector banks were wholesale lenders. Now, in the last decade, we have moved to a judicious mix of retail and retail agriculture, MSME, corporate. I think the books are much more balanced in terms of the loans.
So when you're talking about this Viksit Bharat idea, the idea that you're in about 22 years from now, you're going to have a developed nation. Obviously, banks will form a core part of it because financing is the necessity. But if you can tell us a little bit more in detail as to what, say, State Bank of India and the broader banking system can and will do in these coming 20 odd years, what can we look forward to?
So I think you called it blueprint for Viksit Bharat, right? One of the critical elements for this blueprint to work is the capital. And today, much of the debt capital actually comes from the bank loans. Earlier also I mentioned that the nature of savings is undergoing a change. There is a shift in the depositors' behavior or the savers' behavior, that asset allocation is being adopted across the segments of the savers. So if we really have to contribute to the capital which is required for our goals of $35 trillion economy by 2047, this capital may not come purely from the banking system. It has to come from where the savings are going to. Even today, there is an immense need in terms of getting this capital, particularly debt capital from the mutual fund industry, insurance industry, pension funds. So there is a requirement of deepening the bond market. The bank loans alone will not be sufficient. If the savings are getting allocated, I think the debt capital also come from these segments. I think this is one point which, going forward, we will have to see more depth in the market. While the banks continue to play an important role because the 35-36% household savings, what we have, one of the largest household savings in the world, they predominantly go to the banking sector currently. So that role will continue to be played, but I think significant contribution has to come from the other sectors also.
Do you see that changing, sir? The shift in saving patterns? Because, the rate of deposit growth and the difficulty in deposit growth, which a lot of financial institutions now face, do you see that as a change in pattern which has now begun and will only deepen? I'm wondering, as a veteran banker, how do you see it when maybe relatively more households want to invest, say, in a mutual fund and not put their money in an FD?
So that shift is kind of irreversible, despite whatever is happening in the markets. I believe that as I mentioned, people would like to allocate their savings. It is just not that, you just put in your bank account and not do anything about it. It is not only in terms of it is going to the investments outside the banking system. Within the bank also, we see that the ease of doing transaction has contributed to a significant term deposits. So if somebody had 50,000 rupees in the past, and if they had to make this 50,000 rupees into a fixed deposit, going to the branch, filling up the form, people didn't bother about actually moving that funds to fixed deposit. Now in 2 clicks, 3 clicks, you can shift and there's no click also required if you are actually putting the sweep. So which means that there will be a shift in terms of, I think we should be okay with as long as it is moving from savings to fixed deposit.
But it's there.
But if it is going out into the market, which is inevitable, I think that is what point which I'm making is, for Viksit Bharat, the capital has to come from domestic capital, from the banking system, and also the sectors where the savings are being acted upon. And also we need foreign capital to come in. I think that is also another thing what FDI, role of FDI in the development of infrastructure, other corporate, capex programs is extremely important.
I want to jump to the asset side of the story. Now, as the largest lender in the economy, obviously, you're a barometer for this entire ecosystem, right? One thing that seems to be a constant sort of question from the media and from people outside is when is the private sector going to actually start spending on this, on their growth, on their capex? I wanted to get your view. A, are you seeing green shoots, or are we well past the green shoot stage? A, and B, what can you do more so that the private sector does feel more comfortable to come out and spend and thereby help the growth?
The private capital expenditure, from where I sit, I see that private capital expenditure is happening. Maybe we are kind of an outlier because we are the largest player in the project financing. So obviously, whatever projects there in the market will come to us. So if you see our pipeline, I mentioned in my analyst meet also that we have both in terms of the capital expenditure by the public sector as well as private sector is almost about 2.5 lakh crores, which is a very good visibility. And I also mentioned that the sectors which are not actually spending is the core sectors like steel. And it's not about that they don't have the domestic consumption or demand, but I think everybody is watching what is the external sector is going to be. You did mention something about tariffs, right, to the Commerce Minister. But it's a fact that all of these core sectors are waiting, particularly steel is waiting, that how these tariffs, not in India, but in other countries, how is it going to play, whether it is going to lead to any dumping. Yeah. So this is something what everybody is watching. But otherwise, I see the sectors like, renewables continue to be doing well across the segments within the renewables. Roads are doing well and data centers are doing well. So if we measure the private capital expenditure only by way of steel, cement and these things, I think we need to wait for some more time for the dust to settle down in the West and then things become clearer.
Well put, sir. So in that sense, the big boost for the economy broadly for the last, I would say 2 years or so, has been a huge push in government expenditure and public expenditure. That the fear is, and when I say fear, I temper it with maybe what equity participants are seeing broadly, that is there going to be now slowdown in government capex? Because there is only that much that the central government can spend and actually go out and spend, even if you budget. What is the sort of trend that you would observe? Is that now a cycle which has bottomed out and will peak again?
No, the government is committed. I think FM during her visit, post-budget also made it very clear that the government, central government's commitment to the capital expenditure will continue to be there. And what we have seen is that we need to look at the capital expenditure from the government side, three components. One is the central government commitment, almost about 11.1 lakh crore for the capital expenditure, and the capital expenditure programs of the public sector entities. That is almost 4 lakh crores.
Yeah.
Our assessment, of course, FM mentioned something about maybe 1 lakh crore from the state governments, but we see that through the grants given by the central government, there is a capital programs about 4 lakh crores from the state governments, which add up to a significant number of 19 lakh crores. So I don't think central government or any of the governments, it is a fact that most of the state governments in the last 1 year, because of the elections and so many commitments, were not able to spend as much on the capital expenditure program. We are seeing that even the state governments are coming out with their capex programs, which means that the commitment towards capital expenditure is definitely there.
I want to touch upon, we've talked about private expenditure and government expenditure, but private consumption and thereby banks' role in providing that retail loan boost. Over the last 1 year or so, banks have, a little over a 1 year period, banks have slowed down that piece. One outcome of that is that people are not now spending as much as they used to spend 18 months ago even. To your mind, are we done with that period where that caution was warranted? And maybe now things are starting to look up a little bit on the retail consumption side.
No, on the retail personal side, the home loans are doing very well. I think the concern is mainly in terms of unsecured personal loans. I believe that it is bottomed out. From here, there would be growth in the unsecured personal loans. The degrowth or deceleration which has happened mainly several factors. Is not only about the regulatory action in terms of increasing the risk weights. It is also a fact that many of us looked at the individual leverage and we realized that the small value loans, particularly 50,000 to 1 lakh rupees for the new to credit customers, there's been a building up of the leverage. And that made many people to relook at their models of underwriting. And one of the important systemic development which I keep talking about is the frequency of bureau data refresh, which is now currently happening every 15 days. That means there is a greater visibility of the leverage at the individual and the family level. So obviously that will prevent multiple borrowings and eventual defaults on the new to credit segment.
So, sir, just very interesting thing, of course, you were here in Mumbai, Finance Minister as well, and you've launched the SIP for 250 rupees under the aegis of State Bank of India. When we talk about, and the reason I mention is, when we talk about Viksit Bharat, it can go nowhere without financial inclusion. And I can't think of a larger entity or a better poised entity than State Bank to actually take that further, not just physically being present in every corner of the country. What is the role of financial inclusion and allowing and really giving way to such kind of savings? Letting people access these kind of savings. How crucial does that become when the big urge is now to spend on something that you probably cannot buy now, pay later, but to really encourage this kind of saving?
See, this is also another element of blueprint for your Viksit Bharat. You can't truly become a developed nation unless we take every segment of the society in our economic development journey. And when we talk about financial inclusion, the financial aspect of it had element of savings, credit, and insurance, right? Investment, the fourth piece. The savings had element of having a bank account, and we have done phenomenally well in terms of Prime Minister Jan Dhan accounts. We take pride in the SBI. We maintain almost more than 15 crore Prime Minister Jan Dhan accounts, which all of them have started with zero balance a few years ago. But today, they're all funded. Less than 1% of these accounts are zero balance, which means that people have caught up with the savings habit, right? That is one part. The second segment in terms of the insurance, which with the support of the Government of India, the Jan Suraksha program has been extremely popular. And we have almost 40% market share, and millions of people are now covered under the accident insurance, life insurance, and the pension schemes of the Government of India. So the piece which was, in our view, was missing is in terms of how do we make them start a little bit of investment. If we think that the capital market has helped, or the mutual fund industry through the capital market has helped to create the wealth, if not the wealth, at least increase their, the potential from their savings, is the background of, this Chota SIP, what we call, 250 rupees. And this is completely digital journey. Again, we will achieve the twin objective of making them digitally savvy, which they are. And the second thing is that, and this 250 rupees is not a monthly SIP. I think a lot of people think that 250 rupees mein kya hoga? How long you'll have to save? But we notice that a lot of people in the rural and semi-urban areas do a daily savings. Wow. So this SIP, initially we are starting with fortnightly and monthly, but we would like to have a daily SIP. At the end of the day, if somebody has got 250 rupees, can I put in this? I think this is, in our view, is a great step towards financial inclusion in the investment side.
Excellent. Just sticking to this financial inclusion theme a little bit, as SBI, banker to every third Indian, I mean, you pretty much hit the financial inclusion goal. What is it that you, as a bank, I'm not talking about as the SBI group, but as a bank, what more do you think that you can do for the broader population at this point?
In terms of financial inclusion, I think the credit is still a challenge for them. We have done a very successful program through the Prime Minister's Swanidhi, which a lot of people don't understand that SBI is capable of giving 10,000 rupees loan to a 10,000 crore rupee loan. And this is the range, right? But I think a large number of people are still out of the formal segment. We need to bring them, and how easily the access to this credit is made available. And it is not only access, the quality of credit that, need to assess their requirement and make it available at affordable rates and at the time which they need. I think these are some of the elements I still believe in the financial inclusion we need to work on. And MFIs, NBFCs have done a great job. I think we must give credit to them that in terms of the financial inclusion, last mile connectivity for the mainstream banks have been provided by them. I think that journey will continue.
Thank you so much, sir, for speaking with us. Truly inspiring to hear your vision for the banker to the nation, really. And the way also this bank has modernized and digitized as well. Thank you. Please give it up for Mr. Setty.
We'll just take a photo.